Hi, welcome back. Well, we've talked about how to buy a car. Now we got to talk about how to pay for that car. Most of us can't pay for a brand new car out front, cash. So most of us will be taking out an automobile loan. So let's take a look at a typical automobile loan. So first of all, an automobile loan is a secured loan. That means that the money that is lent to you has an understanding that the car can be taken away if not paid off. Basically, your car can be repossessed if you don't pay it in full. So when you get a loan, the bank or the lender, credit union, they hold the title of the car until the loan is paid off. The vehicle title, otherwise known as the pink slip, you get that from the DMV when you're paying all your DMV fees. When you buy a car, you need to figure out how much do I need to borrow? How much do I need to finance? So here's an example of how to figure out how much you need to finance when you buy a new car. So in this example, we're going to buy a car. We've already figured out the registration fees and the sales tax, and the total becomes $12,036.47. You're going to get a trade-in allowance because you're going to trade in your old car. The dealership's going to give you $1,250 for that. And you're going to have another $2,000 cash that you're going to put down towards the car. So after all this is done, how much do I actually need to borrow from the bank? So the first thing we need to do is to find the down payment. So to do that, we're going to take the trade-in allowance and the cash down, and we're going to add those together. We get a total of $3,250 when we do this. We're going to now take that and subtract that from the price of the car. So $12,036.47 minus the $3,250 gives us $8,786.47 that I still need to pay for the car. That's going to be the amount I need to finance. Once I finance the car, I need to figure out, well, I know when I borrow from a bank, I need to pay interest too. How do I figure out how much interest I'm going to be paying on my car? So we're going to look at the same car, same example. We are now figured out we're going to borrow $8,786.47, and we qualified for a loan, a 5-year loan. 5 years is 60 months because we pay our car payment every month, and we're going to get 10.25% on that loan. Okay, we want to find out how much interest or how much finance charge do I need to pay once the car is all paid off. So to do this, we're going to look at a 5-year loan at 10.25%. And we're going to look at, for every $100 that I have to pay on that loan, I have to pay $2.14. So the first step that we're going to do, we're going to find how many $100 do I need to finance. So I know I need to borrow this whole amount, but how many $100 are in that? So we just divide by $100 and we get 87.8647 $100 increments are in this 8786. Next, we're going to try and figure out what our monthly payment is. So we take that 87.8647 and we times that by $2.14. Again, make sure you're rounding to 2 decimal places because we're talking about money. So my monthly payment now will be $188.03. If I pay that every month for 60 months, how much am I going to end up paying? So to find the total amount paid over 60 months, just multiply that amount by 60. So you will see that I'm paying $11,281.87 back to the bank where I borrowed only $8,700. The difference between those two numbers, our $11,000 and our $8,786, is your finance charge. So to find that, we subtract those. So take that $11,281, subtract it from the $8,786, and you can see that we are paying $2,495.33 in finance charges. So now to find the total cost of my car, now that after everything's said, paid, and done, remember my car originally was only $12,000, but that didn't take into account all the finance charges, the interest that I had to pay. So you need to add that to the final cost. So the $12,036.47, which was what the cost of the car was with tax and license, add the finance charge to it,